As Jamie Dimon says, once you have one cockroach, you always have more. And we've had two cockroaches so far. And I think the correction in the banking sector is going to be pretty massive. Will financial markets continue to rise over these walls of worry? My take is there are, again, two alternatives. One is the overall message is be very cautious in financial markets over the next 3 to 6 months.
You're watching CapitalCosm. My name is Danny. It is October 22nd, 2025, and my guest today is Simon Hunt from Simon Hunt Strategic Services. Simon, thank you so much for coming on, my friend.
Well, thank you for having me as always.
No, the pleasure.
My pleasure and honor to be asked.
The pleasure is all mine, good sir. The pleasure is all ours, I should say. You always come with deep insights and knowledge on all domains. So let's go ahead and kick it off. I'm looking at the gold and silver prices today. We had a massive sell-off yesterday. Gold dropped at the single biggest sell-off day since 2013. Silver had a massive drop as well, down 8%. Things seem to have cooled down a bit, though. Silver's up 1% today. Gold is still down, however. What's your view on what's transpired so far in the metals market? Is this just a correction within a secular bull market? Is this the end of the bull market? How do you see things unfolding from here?
No, it's a correction in an ongoing bull market, which has got several more legs to run. But bull markets always have corrections. And you want to get the weak guys out, and this is what's happening. And I suspect that the real correction will start when we have the beginnings of a real equity market correction, not just in the USA, but globally. And parts of the correction will be pretty large, particularly in the A1 related stocks, Mag 7, etc., etc.
AI, you mean?
I mean, yeah. And in the banking sector, I mean, you are seeing, as Jamie Dimon says, once you have one cockroach, you always have more. And we've had two cockroaches so far. And I think the correction in the banking sector is going to be pretty massive.
What about the correction?
So it's only a correction in an ongoing bull market for gold. And what is the bull market telling us? It's telling us that global tensions are rising and will continue to rise. It's less at this stage that gold is telling us about rising inflation. That, I think, will be a second part of the bull story starting second half of next year. But at the moment, the big picture is what gold is telling us to be concerned about. The big picture is that Washington is beginning to get worried about how the BRICS group of nations are maturing. And if allowed to mature, then Washington will have only two options. One is to eat hat and compromise enough to join the multipolar world, or more likely to fight BRICS, group of nations, financially or militarily, and probably both at some point in the future, which my guess would be 2028 to 2030. Sometime in then, we will see which way the world is going to evolve, a multipolar world or a unipolar world. So that's basically, and the tensions that you're seeing in Europe, in the Middle East, in Latin America, i.e. Venezuela, and parts of Central Asia are all part of this big picture.
I see. And then going back to the gold correction, how long in the tooth do you anticipate this correction to go? And how long in the tooth do you anticipate the bull market to go? It seems like 2030 is when things can really top off in terms of gold.
I would say, I would put it earlier, 2028.
2028. And then
Yeah.
2028 is the top for gold, or is that when the correction ends for gold?
No, the correction will only last a month or two.
Okay.
But it could be in line with an equity market correction generally. That is when margins get called and households and institutions sell what they can sell at a profit, and gold will be one of those items.
And do you have like a timeline for that market-wide sell-off?
I said 1 to 2 months. I'm not clever enough to be more precise. So short, basically short. It's a short-term correction, but it could be pretty vicious, with prices on our technical work falling to about 3,000.
Gold, 3,000 gold?
Yeah.
That's a pretty big drop.
Yeah. But if you're going to have parts of the equity market, particularly those crazy prices being seen in the Mag 7s, et cetera, possibly falling by 30 to 40%, then it's not unreasonable to think that you'll have a decent correction in gold in an ongoing bull market. The weak guys will be shaken out, which is, I think, what the big players want to see.
So do you anticipate market weakness arriving before something pops off, whether it be in Ukraine or Iran? Because I would think that an Iran war, which appears to be more imminent than a Ukraine expansion of the war, between an Iran war, probably more imminent, right?
I'm not sure about that. I'm not sure about that because Russia's is not going to budge 1 inch from what they laid out in June 2024. And what they laid out is unacceptable to NATO and to Washington. So I think, well, that's the short term. The proposed summit meeting on which so much hope was being placed for a peace deal in Ukraine has been at best postponed and at worst cancelled. Because from what I hear from Moscow, when Lavrov and Rubio talked on the telephone, Lavrov laid it out clearly repeated again what their terms are, and those were unacceptable to Washington. And I think that what we're going to see is that the war does escalate. Russia will not just want the parts of Ukraine where there are large pockets of Russian population, but they will want control over the important parts also of Ukraine, Kiev, and Odessa. What is really driving Russian policy is their future security. The future security means no NATO involvement in Ukraine in any form, and demands that the populated parts of Ukraine by Russians will be recognized internationally as part of Russia. What this means, and there's also another item which is not voiced generally, that is that the Bandera Nazi mob be exterminated before negotiations can take place. The reason being is that if they are allowed to regain their strength or thrive, then there will be another war in the Ukraine, because the Banderas hate anything to do with Russia. So the war is not going to end tomorrow. There will be no peace plan in the near future. And that, I think, will be an upset for many in the financial markets who have been placing bets that Trump will be able to negotiate a peace plan.
It's interesting you mentioned the Ukraine conflict continuing to spiral out of control, because if you look at a chart of gold, it wasn't really until early 2024, until after that initial breakout of the Ukraine war, that gold started to rally as a vote of no confidence in the U.S. hegemony. This came after the U.S. had frozen all of these Russian assets, and that's really when you started to see the gold price rally. And so as things, I think it kind of solidifies what you're saying here, Simon, is that gold is rallying because of rising tensions, and tensions continue to rise.
Correct.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020. Interesting. Let's go ahead and...
Then you have to add on to that. Why are central banks buying so much gold? And I think part of the reason not just as a diversification from dollars, but it's also because if you look at what the BRICS group of nations are doing to obviate the need to use dollars in their trade negotiations between each member country,
Mm-hmm.
then if you add the numbers up, which I've not yet done, it's a large part of the global trade in dollars. So what is happening is, I mean, you had the other day, maybe it was today, this morning, I can't remember, New Delhi announcing that they will use rupees and other BRICS member countries in their trade payments. So you have to ask, how is this done? If you are, say, Russia, you have a trade surplus with China. How is that trade surplus being financed? The answer is that within the PBOC vaults, a sum of money, a sum of gold, which is equivalent to the trade surplus, is shifted into the Russian corner. So this is the playbook for what is going to happen and is happening in BRICS member countries. The Shanghai Gold Exchange is in the process of building gold vaults in member countries. There's a gold facility now in Hong Kong. In Saudi Arabia, the Shanghai Gold Exchange vault is either completed or near completion, so that China can buy, if necessary, all the oil that comes from Saudi Arabia in the CNY, the Chinese currency. And that for Saudi Arabia is covered by the gold in the vault. That's what's going to happen across the BRICS member countries.
And I guess
So it's a fundamental reason why the dollar, a large part of the dollar used in trade payments, won't be there. And that, of course, is a big concern for Washington. And it comes back to the big picture. Is Washington going to allow their dominant status in the world politically and financially through the dollar, will they allow it to be broken?
Or will they simply retreat to their side of the hemisphere? Because if you look at what's happening here, it looks like the war drums are starting in Venezuela. And you talk about energy markets. Well, Venezuela has, I believe, the world's biggest oil reserve underneath its soil, does it not?
Correct. It comes back to the Washington's big long-term picture, which is best summed up by saying, he who controls the world's energy controls the world. And I think this is part of Washington's long-term, because it's not going to happen in a year or two, policy. Venezuela, as you said, has the world's biggest reserves of oil. Then you go further south, and you've got Brazil with 1 to 2%. Then you go even further south to Argentina, who've got these massive reserves of what do you call it? Fractured oil. Then if you go to the Middle East, if you can, I don't think you will be able to, but you will try probably to do regime change in Iran, then you have another big lump of energy reserves in your back pocket, then what are you going to do about the Gulf countries?
Mm.
My take is this, from a couple of discussions I've had. Whoever wins the war on Ukraine, the Gulf countries will back. They're playing both sides. So if Iran outs America and Israel, then they will back Iran. And then things will be very smooth. If America wins, then they'll back America. It's as simple as that.
They go where the wind blows.
Exactly. You might put it the other way around. Which way the money blows.
That's a good way of putting it. You mentioned Argentina. Is the reason why we're bailing out? Is the reason why the United States is bailing out Argentina with buying meat from their market? I think Trump made like a multi-billion-dollar deal with their meat industry to buy their beef, and providing all of these bailouts. Is Argentina in the process of being vassalized by the United States? And is Brazil next on the chopping block as well? Trump and Lula are not very friendly to one another. I don't think there's much positivity between the two. So, how do you see the United States' role in the Western Hemisphere? Because you remember all the way back to early 2025, at the early days, I should say, of the Trump administration, you had all of these talks about making Canada a 51st state, buying Greenland, and just kind of creating like this fortress America in the Western Hemisphere. Is that still in play? Is America going to retreat away as a global power and become not a regional power, but a hemispheric power, let's say, of the Western Hemisphere instead?
It's a very, very good question. The talk, of course, is America is retreating. But if you retreat, you lose your dominant status. As we said before, if you lose your dominant status, you lose your hegemony. You are no longer the superpower. So the neocons are not going to give up that status easily. So I think, I come back to what I said before, he who controls energy controls the world. And that is the long-term objective of Washington. I think there are short-term plays. The long-term is that one. But I think as part of the big picture, what clearly came out of the ESSO meeting in Tianjin and the discussions in Beijing is that the big powers in BRICS agreed they are going to stand firm. So it's Russia over Ukraine, it's Modi over oil, it's Iran over independence, and it's China over trade and tariffs. So the big point here is China's new controls on the export of rare earths and magnets directly or indirectly to America. My take is that they are not going to budge an inch on that. And whilst America is developing alternative plans in order to become not reliant on China, these take 5 to 10 years. In the meantime, China is in the driver's seat. And I don't think that they're going to budge an inch. What does that mean? Even the think tanks in Washington are saying that in a matter of weeks or a few months, the defense industries will be out of rare earths and magnets, appliance industries, etc., the auto industry. They'll ground to a halt. So, what happens then?
What do you think happens?
I knew you were going to ask that question.
You lined it up.
It can only be one of two things. One, Washington eats hat. Or two, there's a financial war.
I'll take the latter.
I won't argue against you. I gave you the two alternatives. So what this is all saying is that ahead of us is a very fractured world, a world where geopolitical and financial tensions will rise. We have a fragile shadow banking system where the cockroaches are beginning to emerge. Will financial markets continue to rise over these walls of worry? My take is there are, again, two alternatives. One is that central banks and governments throw everything into the kitty to kick the can down the road one more time, which leads to a highly inflationary takeoff. It's basically stagflation, where inflation rises faster than real growth, which means huge bull markets emerging after this correction in equities and base metals and precious metals, gold, silver, platinum, or else the powers of, or else that we don't get into that inflation takeoff, but the recession, which is starting now, both in America and in Europe, will continue until 2028 at least.
I see.
One of, I mean, my own primary scenario for a long time has been the inflation takeoff, but I'm beginning to worry that we're not going to have it.
We're not going to have inflation?
We're going in straight into recession.
And then inflation?
No, I don't think so. Because I think that the cockroaches in the shadow banking sector are going to, having seen what has happened in the last, since 2021, 2022, you've got the shadow banking sector in America, 1.7 trillion, the global shadow banking sector, 25 trillion. These can overpower anything that the Fed and governments can throw into the kitty. At a time when you will have escalating geopolitical tensions, and as you've been saying, the risk of war against Iran, and what I'm saying is a definite escalation of the war in Ukraine, let alone the other geopolitical hotspots in Central Asia, Latin America, etc.
Now, it sounds like, I mean, what would you go long in this case? Because it sounds like you would just go long in cash if you anticipate a big market correction in disinflationary or deflationary aspects to the world economy moving forward.
You have enough cash to live day-to-day life, but you stay long of gold for your future security. And that's a hedge against your declining value of cash.
So gold and cash. What about silver?
As part of silver, I mean, I don't follow silver closely, but silver has an industrial use that gold does not have, which adds to silver's attractiveness. So once we've had these corrections in gold and silver, then probably silver is going to outrun gold on the upside.
I see. And let's go ahead and leverage your expertise on copper. What about copper? How do you anticipate copper to move from here on out?
That's a very timely question, because I've just finished a short report on copper based on what producers and consumers see in terms of production and consumption this year and next year. And the answer is the market is in big surplus now, will remain in big surplus next year. So how long can these proverbial bulls from the financial sector keep prices up above 10,000, and probably the real price should be closer to 7,000? And I think that with America heading into, America is in recession now, and Europe is heading towards recession any moment now. Physical consumption will remain weak. And if we get, as we've been discussing, a big correction in equity markets, then the copper bulls will be left hanging.
I see. Who's trying to keep the copper price higher, though?
The algos playing their games, financial community. The trade is just letting this go over their heads, not involved at all.
Interesting.
And the further negative is that from now until the end of the year, physical consumption in China will remain weak. It was strong in the first half of the year for all sorts of reasons, preempting exporters, preempting tariffs. That's all past now. And particularly if, as we think is likely, that China is going to stand firm on rare earths and tariffs, then America is going to react in some form or another, and China is prepared for it. But it will mean that domestic consumption of copper in China will be weak from now until the end of the year, and probably through at least the first half of next year.
Interesting. Now, before we sign off here, I want to get your thoughts on the situation in Iran. As you well know, it's been put on ice since June or so. Do you see that flaring back up anytime soon?
I wish I could answer on timing. I'm finding that very difficult at the moment. It is going to flare up. Whether it's this year or next year, I don't know.
Guess we'll have to wait and find out then. Any other things you've heard from the grapevine, because I know you have a lot of different sources out there. Anything that you want to share from that end, or anything that you want to talk about that we didn't get into? Feel free to do so before we wrap up here.
I think my overall message is be very cautious in financial markets over the next 3 to 6 months. And then we can see which of my two scenarios will prevail.
Understood. Well, Simon, it's been a pleasure having you on as always, my friend. Where can people find you if they want to see more of your work?
Simon-Hunt.com or Simon Hunt Strategic Services.
Excellent. We'll have the links to that website down below. Simon, thank you so much for coming on, my friend. Always a pleasure hearing from you. And guys, if you enjoyed this podcast, drop us a like and comment, "Go, Simon, go," in the comment section. If you agreed or disagreed, either way, do let me know your thoughts. I do go through the trouble of reading every single comment. I may not be able to reply to everything, but I do read the comments. So drop me your thoughts. Let me know what you think, and subscribe to the channel so you don't miss an episode. And by liking, subscribing, and commenting and doing all the YouTube stuff, you do help us out. You do help in pushing us out into the algorithm, whether it be through this video or through the channel. So a little bit may not seem like much, but it does go a long way. And then finally, check out CapitalCosm.substack.com to get all my interviews early and ad-free. And consider anything from the list of affiliates and products that we have in the description box. And by checking out our good affiliates down below and buying whatever discounted items and products that we're promoting at the moment, you do help and support us that way, and you get a cool product in return. So check all of them out. We've got 10% off the Trends. 10% off the Trends Journal, 1,000% off, $1,000 off. This part would be I'll cut this part. I'm getting a little too ahead of myself. All right, guys. I'll catch you later. Bye.